Do you know that there are over 28 currency pairs? And that's not including exotic pairs like the Turkish lira or the Mexican peso. If you factor exotic currencies in, you will get more than 50 currency pairs to choose from. And if you want to find the highest probability momentum trading setups, you need to select the right currency pair. If you choose the right currency pair to focus on, you would have already won half the battle. You want to pair a strong currency with a weak currency. That's how you get the highest probability setup and a trade that can potentially make you a lot of money. Choose the wrong currency pair and you will see your momentum trade going nowhere. And hey, a momentum trade is supposed to show you green right away. In this video, I'm going to show you how to find the right currency pairs to focus on so that you can identify high probability momentum trading setups and trade those setups. Many trading videos out there teach you how to find the setups, but they do not teach you how to pick the right currency pairs first before doing that. They skip a step and hence have already lost half the battle. So what ends up happening is that traders go on applying the momentum setup onto every currency pair he sees, even on currency pairs that are not strong, and end up getting into trades that go nowhere. And even if they do make money, they are not making a lot of money because they are not on those explosive moves, which results from pairing a strong currency with a weak currency. Before I jump straight into selecting the right currency pair, it's time for you to smash the like button and hit the subscribe button if you're new. We put in a lot of work to create valuable trading tutorial videos like this, and I would really appreciate it if you could take a second or two. It doesn't take much effort, but it means a lot to the entire team. As always, if you wish to participate in our giveaway worth $37, then look for an emoji somewhere in this video. We will announce the winner in the next video, so do watch out for that as well. You can find the full instructions in the pinned comment down below. Now back to why you are here for. Let's talk about currency pair selection. How do you select the currency pair that has the potential to move explosively? Well, the approach I like to take is the bird's eye view approach. Now, depending on what trading platform you are using, your layout might be different. But assuming that you are using MetaTrader 4, then what you can do is set up your charts just like this. The idea is that you can see all the different currency pairs for a fixed currency. In this example, the specific currency is yen. And you can see that all the charts here are yen pairs. You can see dollar yen, CAD yen, Aussie yen, and so on and so forth. Now, this bird's eye view approach is meant to tell you if yen is strong or weak. It's not meant to tell you the strength of the other currency pair. If you see that most yen pairs are all heading up, you can conclude that yen is a good candidate for momentum play. However, if you see that the movement is mixed across the board, perhaps something like half of the currency pair looks bullish and the other half looks bearish, then that tells you that you should avoid trading the currency, at least if you are trying to trade a momentum setup. If you want to trade a ranging or mean reversion strategy, that's an entirely different scenario. If you want to learn how to trade those, I've previously uploaded a video about range trading. I will leave a link to that video at the top right corner and at the end screen of this video. But let's stick to momentum trading for now because that's the focus of this video. What you have to understand is that the market moves in themes. If you trade stocks, you will know something called sector rotation. And it's the same thing in the Forex market. One week it might be yen, and then the next might be CAD. Obviously, if you are trying to catch a momentum setup, you want to align yourself with the market's theme. And that's by making sure that most of the currency pairs of a currency are moving in the same direction. That's how you pick the right currency pair. So right here, this is an example of what you should be looking for. You can see that the majority of the currency pairs for yen is bullish, So yen is a good candidate for a momentum setup. Now I have shown you how to pick the right currency pair, which most trading tutorial videos out there miss out on. Now let me show you how to actually trade them. This is where the rubber meets the road. Once you have firmed up the right currency pair, you are going to want to look for an inside bar. This is an inside bar trading strategy. So quickly, let me run you through how an inside bar looks because I want to be thorough, especially for those of you who are still new to trading. So this is how an inside bar looks. As the name suggests, an inside bar is a bar that lies within the previous bar's range. Think of it as the opposite of an engulfing candle. The previous candle engulfs the current candle. This is used as a momentum or breakout setup because it functions just like a spring. You have price moving and then suddenly the candle's range compresses like a spring. And what happens when a spring is compressed? Well, it explodes when it's released. It's the same concept here. When the price is compressed, it explodes subsequently. Now, what I love very much about the inside bar is that it allows you to get in with a tight stop loss. And because it's like a spring that has the potential to explode massively, you could potentially get a big, juicy reward to risk trade. I'm talking about trades with 1 to 3 or even 1 to 5. Meaning to say that if you risk $100, you could make $300 or $500. If you were listening earlier and combine this concept with the bird's eye view of picking the right currency pair, can you now see why this is such a powerful trading strategy? First, you pick the right currency to focus on. This ensures that the pair will move massively. Next, we time our entry in a way that gives us minimum risk and maximum reward via an inside bar. So let's talk about the entry, stop loss and take profit. Your entry is above or below the inside bar candle, depending on whether you are long or short. If you intend to go long, then look to buy when price exceeds the inside bar high. Alternatively, if you are looking to sell, then look to sell when price exceeds the inside bar's low. Now, a word of caution, please look at the existing market structure before you trade the inside bar. You don't want to be trading an inside bar that is at support or resistance. You have to check if there's any nearby market structure that may act as a barrier or obstacle. Please do not start trading every single inside bar you see. That's a recipe for disaster and you will blow your account if you mindlessly trade like this. You have to consider the market structure. For your stop loss, it goes above or below the inside bar with a buffer. Set in a buffer in case the price gets a little whippy. And for your take profit, this is a little trickier because there's really no fixed answer when it comes to trade management and profit taking. If you are new to trading or are still struggling, I recommend sticking to a fixed risk to reward ratio to keep things simple. Perhaps a good risk to reward of 1:3. So suppose your risk is 30 pips, in this case, your take profit target will be 90 pips. It's simple. If you do it this way, you only need to win 25% of the time to break even. It's not too difficult to achieve if you stick to the right currency pair to trade. Now, if you are a little more advanced, then you can opt for something like a trailing stop loss or a higher time frame support and resistance level as your take profit target. This way, you will be able to maximize your profits because remember, you are trading with momentum and sometimes momentum can be really strong. So summing up this video, the first thing that most people miss out when momentum trading is picking the right currency pair to focus on. You want to set up your charts this way to have a bird's eye view of the currency. Once you spot that a currency has majority of its pairs in a single direction, you can then zoom into the charts and start looking for an inside bar. When it comes to trading inside bar, check that there is no nearby support or resistance. You don't want to be buying an inside bar into resistance or selling an inside bar into support. That's it for this video. I hope you got a ton of value. As promised, I will leave a link to the range trading strategy over here. And if you find that this strategy is too complicated for you, then you should definitely check out that strategy video out next, because it's quite easy. Thanks for watching, and don't forget to smash that subscribe button so that you won't miss out on any of my future videos.